Good day, traders. Just a short recap on a trade on the pound yen. This morning, I took a trade on the Aussie yen, and great point brought up by a trader. Why did I pick the Aussie yen as opposed to the euro or the pound yen? And in retrospect, I saw that, but I got a bit fixated on the Aussie yen this morning. It was the hot chick trade from yesterday. It was the strong mover. I had shiny object syndrome, and I probably wasn't as diligently prepared. And that trade this morning, just to review that, again, the same concepts. We're in a broken down market, so we had a large move come back from Friday's high. So just stepping back out, and we had, again, counting our days of rise, we had day one on Thursday, day two on Friday after payrolls, and then they pumped that up through Friday's high for a third day of rise, and that market gave us the half Batman formation and then started to sell off in Europe and sold off for the rest of the entire day through London and then into the U.S. session, taking out the low of the day. And so the pound yen, Aussie yen euro yen were probably better choices, as they hadn't already taken out the previous day's low. But again, the process is still the same. We had peak formation, lower highs in the U.S. session close. And the first hour came up back into that peak formation high. So one trader, LT, asked that he said, I don't see three levels of rise. When you're in a broken down market, you're not going to get three levels of rise because the market is already broken down. You're not going to get three levels back up into a broken market. That would indicate strength. The setup is this. First hour comes back up 45 minutes, which is three 15-minute bars, which is a 1, 2, 3. But this market came up before breaking down at the open of that middle hour. 3 a.m. Sorry, not 3 a.m. That's the 3 o'clock candle. That is the 8 o'clock, 8 p.m. New York time, and then locked in. We had a little micro double top right at the peak formation, but it's this pump for 45 minutes. The M pattern, the engulfment, the breakdown, and then the pullback into that level. So you've heard me say before, I don't try to sell the high or buy the low, because that's the type of situation where traders can get caught in a parabolic move trying to counter-trend a strongly trending market. What I'm waiting for is for them to lock in the high. When this comes down vertically and snowplows through all this 45 minutes to an hour of rising higher lows where traders are possibly entering into the pump in a long direction, I want to enter into the market after they've locked in that high. This is the safe entry underneath, anywhere underneath that peak formation. And you've heard me say you can enter in anywhere once they lock in the high. Your stop is still going to be placed at the high, and I try to keep it to 15 pips in that area. And so the main thesis once I'm going to get into the market is that I want to get filled at or above the numbers, and again, major round numbers, 50s, double zeros. So the thesis is always the same. They're going to pump it up, lock it in. I'm waiting for them to lock it in. Then I know that we're in a pump and dump scenario, and then retesting on breaking through the low. And I put a set profit target in. Day two down, day one down on this. Day two down on this pair. It was day one down on the pound yen, but a low-hanging fruit trade. The obvious is that they will retest the low when they do the pump and break down. It doesn't mean that it can't reverse, but this market pumped up, locked in the high, gave us our entry, major round numbers, targeting at least the minimum of the previous day's low. And in the other cases, there was a bit further follow-through. They were probably the better choices, but again, I just had shiny object syndrome, which is what brought me to the pound yen in the Europe-London window. Same type of scenario, and I want to point out a couple of things. One is that one trader mentioned he didn't see a break in structure. Again, you're in a broken down market. You will not get a break in structure in most cases in a broken down market. A break in structure will occur when you have three levels of rise, because that's the breakdown inside of the three levels before the market will pull back up into that third level and roll over. When you're in a broken down market, the sideways consolidation, and then they put a high in the first hour. So understand that this is now the new high of the day for the Europe-London session. That's the high of the session. So the low of the day is still intact, but when they come up in that second hour and pump it up, one push, two pushes, three pushes, and a breakdown just prior to the London equity market opens, the high is now locked in. Now, waiting for London gives you the opportunity for them to retest up into that peak formation. But we again had one push, two pushes, we're in at numbers, three pushes in at numbers, no further follow through. We can still lock in our stop. And when it's three pushes, you're definitely targeting a 15 pip stop loss as a maximum, because if for any reason this market did reverse, then the thesis is wrong. But we have our classic pump and dump in a broken down market. So remember, this market, if we just tighten this up, this market has already broken down. The high of the day may already be locked in on day one. We had a big day down yesterday, but this is the first day of breaking new lows. So to our 15-minute chart, we have day one on Thursday of the first day of breaking a previous day's high. Day two on Friday. Day two is on Friday. So again, we talked about this. Monday's day one, of course, for our week, but we have new highs, new lows. So this is day one on Thursday, day two on Friday, and then they broke it and locked it in the Europe window, retested that into the U.S. session open before breaking down and closing in consolidation. And then part of the reason I went for the Aussie yen is I thought it was a bit weaker, but again, in retrospect, obviously the shiny object syndrome allowed me to be distracted from the two potential bigger movers, the pound yen and the Aussie yen. And we can see now, just again stepping back, breakdown, pull back into Monday's low. So whenever we get this breakthrough and pull back, one push, two pushes, 1, 2, 3, 45 minutes into that triple top on the 1 minute chart, just prior to our London Open for the 50 pip plus move down. That went 75 pips. So again, you're in a broken down market. Don't counter trend. Look for the low hanging fruit, the easy trades. As I joked with one trader, for years I did so many things wrong. After a while, this becomes second nature. You have to fight a lot of urges, but in the common sense, when you start to just step back and let time do the work for you, let the market set up, let them start to come to life. If you don't see the pump up, then get suspicious. That's when you can see a creeping trend for a blow-off move. But when they pump it up and they give you that pump in that first hour, they're going to work. They're setting the market up for the trade. And that's what you want to see. If I don't see something come to life, then I'm looking at something else, or I'm just coming back to another session. So put a high in, pump it back up into the high, lock it in. London equity market opens, double zeros, previous day's low, breaks down through the low of the day, and resumes the underlying original trend on day one down. Now, just coming back to some simple things. Remember the golden rule. Where are they going? They're going back potentially to get other traders who are in the money. Now, a few traders ask, well, why don't you leave a trailer in, or why don't you hold on? Whenever we trade back into some of these lower levels, it's possible they could continue to break down through there. But some sessions I'm just looking for a trade and being done. I don't want to be at the screen. I'm not too concerned about nursing it. This trade I didn't feel was going to be, maybe fall all the way through, and it still could. But generally speaking, sometimes you make a decision, you lock it in, and it's nice to lock it in and be off the screen and just know that you had a profitable trade. You can always come back and review it later. But those are the decisions you make based on the trade setup. It's day 2, Tuesday. We're trading back into Friday's payroll, London session low. Just another trade. So keep it simple, traders. Pump and dump, and you can see the bigger pump and dump over Friday's payroll. So they bring it up into the third day. They pump it up. They break the high. They trigger longs. They pull it back inside. We got longs triggered. We have stops potentially at the low of Friday. They would have put their stops back up underneath Monday, potentially if they were in long. They've moved it up a day. Bang, they go straight down right away to hit those stops, pull it back, hit all the traders who are counter trending, and go after any existing longs or any other positions that could be potentially sitting down at London's Friday session. So hopefully that was of some insight and some information. Keep it simple, traders. Have a great day, and may the markets go with you.